Now we will try to attempt question on IP test October 2019. So the first question is 3 example of properties that are not considered as IP according to MFRS. So basically you just answer on the PPE and IP. So maybe you can say for this one, office building, so that this is not IP. Okay, you can say asset, whole asset that is held for sale in the ordinary of business. So this is inventory, right? For sale in ordinary of business. In ordinary, it should be the normal course of business. In ordinary course of business. Ordinary course of business. Okay, you can also say that factory. Okay, so anything that touch on the PPE can be the answer because the question asks for not considered as IP. So you can mention about a property that is being constructed for the third party. You can say a property that is leased out under finance lease. Okay, so that will be the answer. Okay, part B. Right, so the question would be discuss the accounting treatment of the IP in 2017 and 2016 and 17. And then the question asks on the theoretical concept of the transfer. Okay, we are concerned on the first. We will concern on the first one, but first, so let's read the question. Shaz Mira, a fast food processing company in Kuala Terengganu, acquired a building for 75.5 million on 1st January 16. Okay, 1st January 16, they acquired the building. That's the purchase price. 75.5 million. Okay, legal and other directly attributable expenses amounted to 12 million. Okay, so you have to add the legal cost, 12 million. Okay, so that will be 87.5 million lah. So this is the initial cost. The building has 20 floors and 18 are rented out at market rental. So you rent it out. This is the rental income, 150,000 per month. And 2 floors are used as its headquarters. So this is OOP, Owners Occupied Property. The floors of the building cannot be stored separately. So this is the one we must find in the question. Because when you have one building but it is used for 2 functions, whether or not you identify them separately is depending on this condition. Because it says here cannot be stored separately, therefore you cannot recognize them separately. You have to recognize only one. So which one? Is it IP or PPE? Because you rent out 18 floors as compared to 2 floors. Therefore, the whole building will be considered as IP because it takes a majority level of the building. Okay? Alright, so therefore this is IP lah. This is IP. The fair value of the building as at 31st December 16. Okay, 31st December 16. The fair value is 90 million. 16 and 17. 16 and 17. So the fair value here is 695 million. On 1st January 19, jauhnya. On 1st January 19, Shaz decided to convert the IP to OOP. On 1st January 19. I hope this question is correct. Let me check first. 1st January 19. 1st January 19. Okay, betul lah tu. Okay. Sekejap. January 19. So it says here, 1st January 19, Shahs decided to convert the IP to OOP. That means there is a transfer from IP to PPE on this date. Okay. So the fair value on that date was 98 million. Okay, dia memang kena bagi tahu lah. So this is 98 million. The company adopt the fair value model in the subsequent measurement of its IP and cost model for the PPE. Okay, so this is using a fair value model. So remember, fair value model, no depreciation. You must write it down because sometimes we mistakenly calculate the depreciation. And PPE is use a cost model. That means subsequently there's no revaluation for the PPE. Okay, so that's it for the information. So discuss the account treatment for the IP in 2016 and 17. Okay, so 2016, that means we have to discuss what happened here, 2016, and also in 2017 here. Okay, so one by one for 31st December 16. So firstly, we will say at the beginning of the year, on 1st January 16, the building is recognized as an IP. Okay. Why? Because the building, the part, because the part used as OOP, okay, ataupun you can say because the part that you use for office use cannot be sold separately. Cannot be sold separately. Alright. So, therefore, the whole building is treated as an IP as it takes majority level, as it takes majority of the levels of the majority of the building lah. Okay. Alright, so kita kena tambah kat sini. The building is recognized as an IP at initial cost of RM. This one, 87.5 million. Okay. Alright. Now, next. Here, IP you measure using a fair value model. So you continue. Since fair value model is adopted for investment property, therefore, no depreciation is charged. Okay. Alright. Okay, now we compare. On 31st December 16, we need to compare with the carrying value. So this, you don't depreciate, you just carry the value here, 87.5 million. So the difference, because fair value is more than carrying value, so the difference is gain on fair value of how much? That will be 2.5 million. Okay. Alright, so we have to mention that here. The difference between the fair value of RM 90 million and the carrying value of RM 87.5 million was a gain on fair value RM 2.5 million to be credited into SOPL because it is a gain. Okay, done with that 60. So now we are in 17. So in 2017, nothing happened except given the fair value here. So you compare with the carrying value. So the one that you have here, the fair value, will be carried forward. So 90 million. So the difference is 5 million. So because fair value is more, therefore this is gain. Gain on fair value. So again, you will credit your SOPL. So 31st December, the gain on fair value of RM 5 million. So you can directly show here RM 95 million minus 90 million is to be credited into SOPL. That's it for the question. Okay. Now, discuss the theoretical concept of the transfer of the building from IP to OOP as at January 19 with reference to FAR320. So, dia cuma nak theoretical concept sahaja, you don't have to calculate. So, how do you answer this part? So, you would say the building is accounted as an IP. Okay, senang kita kata macam ni lah. On 1st January 19, there was a transfer from IP to PPE due to change of use. Okay, this is compulsory. You need to mention what is the transfer from what to what, and due to change of use, mesti kena tulis. Okay, because there is a tick on that. So, apa kita kata tadi? Kat sini dia akan jadikan, okay, cuma cakap convert saja kan? So, sambungannya adalah and dim cost shall be its fair value of. Okay, sekejap saya tengok. Okay, so dekat sini when there is a transfer, so this is basically will be the value of the PPE. Okay, this one will become the value of the PPE. So when we answer, we would say the fair value of RM 98 million is deemed to be the cost of the PPE. Okay, because the question only want the theoretical concept. Okay, what happened if let's say you have to compute, you have to show the accounting treatment. So what you do during the transfer here, okay, this is just an additional explanation. You may get this in another question. So here the fair value will become the carrying value, 95 million, right? So the difference is 3 million. Okay, now remember this is a transfer now. So the treatment will be may be different from here, yeah? So this is a transfer from IP. So the difference here, 3 million, we call it as fair value is more, therefore we call it as gain. Okay, sometimes you may have to put it as surplus. I will explain it later. Because originally it is an IP, therefore the term used in the IP is gain. Therefore, the difference here is gain on fair value. Okay, so subsequently, during 31st December 19, you don't have IP anymore, so you only have PPE. And you have to depreciate your PPE here. Okay, the question does not tell you for this question, I just explained. So when you depreciate, so of course we'll take that 98 million because this is the cost of the PPE and you will divide with the expected useful life. The question will tell you. For this one, they don't tell you because you don't have to compute that. Okay, so you have to get the depreciation for 2019, so that is basically the calculation. Okay, so that is done for this question. I will explain it further in another example. Thank you.